Hello, everyone. Welcome back to the Trading Room. I'm Shane Vernier, and this is the U.S. government shutdown strategy session. Today, we're going to go ahead and we're going to go over a few of the things that we need to know moving ahead with our scheduling. Our stream schedule is going to be a little bit different. We've got some key releases here that we've actually got a little bit of clarity from the Bureau of Labor Statistics on when CPI is coming out and when NFP may be coming out. We've also got a vote coming in the United States Congress. They're trying to vote a temporary spending bill. We don't believe we're going to get it, but that is going on right now. As far as what else we can really say about the situation is this has been one of the most challenging weeks in a long, long time. We've had some great trades. There's great volatility out there, but as far as our schedule and me actually being able to sit here and give you guys concrete keys and tips and things you need to watch in the market, it's been really difficult because nobody seems to know what the heck's going on right now. And I find this interesting. I'm listening to my ears to the rail. I'm listening to a lot of different news sources that are talking about a lot of different things. We've got a big protest scheduled for this weekend. We're talking about the Insurrection Act from the Trump administration. We're seeing a lot of violence on the streets of the United States. There is a lot going on, and a lot of it is going to impact the markets one way or another. Now, we've also got China. U.S.-China tariff battle heats back up, and we've saw some statements out of the Treasury Secretary today, Besson, about pricing floors. Really fascinating stuff, and it's happening in a way that we don't typically get our news. It's coming fast and furious with none of it planned. So we knew that this was going to be a hot time of the year to trade. We absolutely knew that, but is this the best time of year to trade? I think it's turning into an amazing period of time, but it's hard. You've got to have, really, the statements can come out of nowhere. Like we saw last Friday with the Trump tariff announcements against China, just absolutely tank the markets, and then they rebound real quick. You've got to be on your toes. The volatility is sudden, and it comes out of nowhere. So you got to be very careful here. Leverage in check, risk in check. You got to do, everything you do as a trader to be a good trader, you need to take that to the next level and be aware of what's happening here because news seems to be breaking every other minute. And it's hard to stay on top of all of it. This is what I do. And I'm telling you, I've never seen anything quite like what we've seen in the last 3 or 4 weeks. So this is interesting. This is a fascinating time to be in the markets. A lot of opportunity there, also a lot of risk. It's good to see everybody back. Let's see X-Light. Good to see X-Light. Yes, sir. Always welcome, guys. We are going to trade. Hey, how's it going, Coach? I'm doing pretty good, X-Light. Not bad. Hello, Shane. I wish you a good day. I wish you a good day too, Ahmed. My thoughts on the Great Britain pound, a euro. Well, we're watching that trend line closely. That's not a bad place to begin. I'm going to go ahead and pull that chart here in just a second. Let's get started. Hello, English with me. Hello, everyone. Good morning. Good morning, good day, good evening, wherever you may be. For me, it's sort of almost noon. So I'm still kind of in the morning hours, but we're getting ready to shift gears here into the afternoon hours, that's for sure. Blue Mango, good to see you. Over in the How to Trade community, a lot of long-time traders here, a lot of sophisticated folks that have been with us on these live streams for a long time. Lita, good to see you. Lita, Andrea, always a pleasure. Andrea, Bobby, Bob, Tuku, Gordon Williams. All right, we got a great question right here to begin out of Bobby Bob, and then we'll get right out to that trend line over in that Great Britain pound euro. It's a fascinating type of a situation here. Let me see. Bobby Bob, hi, Coach. I want to purchase a funded account. Is this a good time to buy it now that we are heading to the end of the year? Here's the deal, Bobby. It's a fantastic question. You're going to have another 5 weeks right up until the Thanksgiving holiday here in the United States. That's when you're going to have premium trading. And then you're going to come back after the Thanksgiving holiday, which is right at the end of November. You're going to come back, and you're probably going to have another 5 or 6 sessions, maybe 7 sessions that are really solid. And about that second week of December, that's pretty much it. We'll go through that Fed meeting that we're expecting another rate cut in December. But after that, always remember that the powers that be, the big money folks, they always kick off and go on vacation, and they stay on vacation. So for us retail traders, we need to be in the markets when they're liquid and they're deep and they're active. And if we have that, then we have an opportunity to trade successfully. If we don't have that, then we can run into real trouble with liquidity issues, meaning real swift moves in the market, real choppy pricing conditions. You can trade it, but you've got to reduce your leverage. It's just realistically, you don't want to get caught in and around the U.S. holiday season with a tremendous amount of glimmer in play. And what I mean by glimmer in play is a lot of money on the table. You don't want to be doing that time of year. So you've got time if you want to purchase another challenge or another prop challenge or prop evaluation. it's not a bad time to do so right now. We know we're going to have big volatility when the government does reopen, and right now the daily volatility is strong. So I would say you've got about another month to 5, maybe 6 weeks that are going to be pretty good. That's what I would say. Let me see you, Tina. Good to see you, Tina. Welcome back. Now, Lewis, always a pleasure, Lewis. Ahmad, your thoughts about the Great Britain pound and the UK 100 and the best way to keep an eye on for them. Yeah, we're going to go ahead and look at the Great Britain pound euro, or the euro Great Britain pound actually starting right now. Dave, good to see you. Dave, F19. All right, guys, this is the trend line that we've been watching. A little bit tricky. I mean, honestly, it's been a little bit tricky. You sort of had a situation where we had sort of a real defined area where we couldn't get established above that trend line, and then we sort of nice spike, and then we came back down, and then we sort of, and then we got a big negative day, then we had a big positive day, now we've got a big negative day. Should we be long or short right now? In my view, you probably are holding longs. You're probably holding long. So if you were going to take a long here, what you're looking for, your keys to success are going to be how price behaves right around this trend line as we roll later into the session. It's right on it right now, guys. It really is right on it. So if you do get a bounce there and a close above that zone, then you're going to have an ability potentially to make a fantastic trade or two, and I think that might be the ticket. So if I was trading this right now, the Euro Great Britain Pound, I would go right here to my one-click trading on my MT5 platform, and it would be relatively simple for me. You dial in your lots. How many lots do you want? Let's go ahead and just put one lot on this, and let's go ahead and buy the market. So now if I was going to buy this market, okay, we're officially long right here. If I'm going to buy this market, basically from the trend line, a little bit better than we would have got yesterday, pull back right to the trend line. There's nothing wrong with going long right now, even though you have a negative candle. What you have to do is you have to really understand where you want to get out of the market at. So for me, if this was going to take a shot on a position, potentially a position type of a trade, let's go ahead and get this going here. You know exactly where you are. You've got your long position. Let's go ahead and see where we're at with our trade tracker on this MT5. Where is it? Trade. There you go. You've got sort of one long right here. Euro Great Britain pound. What's your exposure? And we're all exposed there. You can see some of the graphics that MT5 has for you. So we're long from 86.94. You really want to see a close up above 87, somewhere in there. But these ranges are very, very tough. They're very what I would call not necessarily big. Not necessarily big. So if you were going to stop yourself out, you could really take a scalp shot and really stop yourself out underneath this weekly low. So this Monday's low, you can certainly stop yourself out down there, and that's somewhere right around 86.70, something like that. So you're only looking at risking like 30 pips, something like that. It's not bad. It's not bad at all. So your risk is dialed in and it's there. You're just looking for a little bit of a break to the top side. As far as your profit target goes, 87.45, somewhere probably right to the top of market structure. Maybe up in here looking for 35 pips or so, maybe 30 pips, and that'll set you up with a nice one-to-one. So let me see exactly what we have and why my drag and drop functionality isn't there. Let me see trade levels. Let's go ahead and do that. Okay, now we've got our trade levels up there. If you have that in queue, you can dial in with your drag and drop functionality, your stop loss. So something like this. Okay, so there would be my stop, and then my profit target. Probably going to look to do something like this right up in here. So that's set us up a nice little trade. It's not a bad one. It's low risk. Remember, 1 to 3% of your trading account on this trade. It's a daily trend line. I still like it. I think that once we got our bullish close, that's going to really play well for us later in the day. But right now, we definitely have pulled off of that high, but it's just so darn tight that we haven't pulled off that much. So what I'm looking for on this trade would be a bullish close above that trend line, and then we just sort of ride that into the sunset and see if we get the accumulation that we're looking for to the top side of this market. Just hasn't been moving. And for the Euro Great Britain pound, that is not anything out of the ordinary. It really isn't. This thing doesn't, sometimes the Euro Great Britain pound just goes into hibernation and does not move. And if that's the case, you can really get chopped up. I think this looks pretty good, though. As far as what I think about the Great Britain pound and the UK 100, I think that global equities are showing a lot of strength. This right here is the US 100. If we wanted to look at the UK 100 just very briefly, what do we have? You have the same basic thing. You've got a long-term uptrend. The money is flowing into global equities. So if I was going to make sort of a couple blanket statements towards the UK 100, the first thing I would be looking at is 95 even. That's absolutely a big-time zone. You can see sort of our all-time high right there is 95.76. So we're getting that compression that we really are not depending on, but expecting around these key levels. So what do you think the big key level is here? All right, you've got a couple of them. You're going to have 750, and these aren't exact guys. I'm not going to dial them in exactly. You guys go right ahead and do that. But 10,000. So what would you be looking at from here? 95, 97, 50, and 10. Those are areas that we're going to be interested in moving forward. As far as what we see right now, we see bullish participation. And I want to be long. I want to be long equities just because we are going into a dovish policy. You can see all of our old analysis. Man, that was a long time ago. When did this analysis come across? That was back in October of 2022. Kind of a nice pullback there. But something like this, what do you want to do? You want to be long or short? I want to be long. As long as we're cutting interest rates around the world from the BOE to the Fed, as long as everybody's cutting interest rates and going into that quantitative easing mindset, I want to be long. The problem is we're probably not going to get that major washout just yet. Now, let's say we were going to wait for that big washout and big pullback here in the US 100 or UK 100. You're looking at 9,300. I mean, you have to come off like 600 points. You've got your 13-period EMA, your 13-month EMA there. I mean, it's all ready. I mean, you really are all ready to make the trade. It's just a real question of when do we get it. I'm not sure that we get it anytime soon. So you definitely want, I have a long side bias. We can bring down, we can bring our sort of our time frames down as low as we want, but are we really getting anywhere with any of this? Not really. I mean, it's just sort of choppy. There's your big correction that came through with the tariff talk, and now you've sort of got something like this coming back down. It's not far enough really to get too involved here. If you wanted to do something like this, you go spike low, maybe do a spike high, maybe 62% down there, 93 and a quarter. Probably a pretty good little trade right there if you wanted to take a long. As far as Great Britain pound USD, we sort of had our ideas with this pair. I sort of had my trade idea out, and I've been an outspoken. Really, I want to bid and play against the dollar. Right now, you're starting to see the U.S. dollar index give a little back today. It seems to be sort of just the way the markets are behaving. Dollar's up one day, dollar's down the next day. Dollar's up, down, down. So I don't see it really going much of anywhere from here. But you are still at that dollar index. You're at 98, which is kind of a top, and you're starting to feel a little toppy up around 100. So, if the dollar does fade, I definitely want to be long this pair. Great Britain pound USD, a pullback. I love that zone. 131.50, 131.75 to 131.50 is fantastic. We're still, about 200 points off of that, 200 pips off of that. Without any economic data from the U.S. government, I think it's going to be tough to get that trade. So that's what I want to see happen. But right now, really in a state of flux, I would have a bullish bias toward this pair, but I'm not really too interested in diving in right now. And you'll notice that things are just turning blood red on Wall Street. We were up earlier, and now you're starting to see the risk assets really take a dive. And down here, you've got sort of gold. Things like gold are up around, gold futures. December gold futures are above 42 now. Silver's exploded again, 1.7%, back up to about 52, 52.50. We'll look at metals here in a minute, but there's a lot to be bullish about. So definitely, we want to be patient, and it's hard to be patient. It's hard to be patient in this environment. There's so much volatility. You want to get in there and get that money. And I hear you. Believe me, I'm right there with you. But is this a time really to be taking huge risks? A lot of uncertainty. We got a potential pullback trade idea in Bitcoin that I do want to highlight today. And there are a few other pairs that we need to hit because there's a lot of action on some of these that we don't typically look at, but they're definitely there. Action's definitely there, and we don't want to miss the action. That's for sure. We don't want to miss that. We want to go anywhere there's volatility. And right now I'm just taking a look at my trade tracker to see exactly where a lot of things lay. All right, a lot of action on Euro USD, a lot of action on the dollar yen, a lot of action on the Great Britain pound USD and Great Britain pound Aussie. So we're going to take a look at some of those currency pairs. I think we're going to be in great shape if we just sort of stick to the game plan here, do a few fundamentals, and we'll do some more price action. And as always, if there's any questions anybody has, be sure to ask. Just take full advantage of these streams. They're interactive in nature, so anything you guys have to say, feel free to drop it either in the YouTube live chat, or if you're in the How to Trade community, you can drop it there. And remember, if you want to reach out to me privately, feel free to head on over to How to Trade, get an account. They're absolutely free, and then you go ahead and just click on my picture, send me a PM, and I'll get right back to you. I've actually got an opportunity to hear from a lot of our veteran traders over the last 10 days or so, and it's been refreshing. There's been a lot of success stories. There's been a lot of folks that are making very, very nice money right now, and that is what it is all about. Make the money. Make the money. Remember, 2 rules on this stream. If it makes money, it's the right answer. And if I don't know, I'm not going to lie to you or BS to you. If I don't know, I'm going to tell you I don't know. Right now, there's a lot of things I don't know, but I do know the markets are beginning to tank. So my guess is there's some sort of tariff talk on the table. All right, here we go. Welcome to the Switch Markets community. If you need a place to trade, head on over to Switch. You've got that reverse KYC program. You can get up and running very quickly, very, very quickly. Bitcoin, let's see, Andrea, Bitcoin right around 110. Yeah, that's where we're going to be going first, I think. And then the U.S. stocks are cratering right now. Fascinating stuff. Let's see if we can maybe get a trade. All right, here's your trade idea. Trade update. Is Bitcoin entering a bear market? Yesterday, I really said I love the bullish side of it. You'll notice that in our Bitcoin ideas, these key levels are messed up because there's no mechanism by which to track anything over 100,000. So it sort of messes up the decimalization of the key level and the next level. So just look in the text. The text is where I give you the levels, and I believe it was 107,250. We're looking for a bid there. Well, I mean, you can see Bitcoin right here. You've got a big time pullback, and we're starting to push those monthly lows right down around that 106.47 level, 106.5. Watching that closely. I want to be aggressive down here, though. Right now, we're seeing compression right around 110, and we talked a lot about 110 as being very, very important. Sort of highlighted this yesterday. The 110 zone really is one of the more attractive key levels as downside support. A lot of people have bought it relatively recently. There's no question about it. I mean, take a good look going back to the 10th of October, last Friday in the tariff talk. Boom, boom, boom. You've got 1, 2, 3 checks, 4 checks. Yesterday we checked it. Now we're checking it again. Now, most of the time you're going to see traders. I watched some, I'm not going to name names because I won't throw other people under the bus. And however they're trading, whatever they're trading, however they're trading, it's great. But the idea was they were looking at volume accumulating towards the top and bottom of ranges and calling for reversals off of that. Now, best way for me to do this is to try to pull maybe a let's see if we can get a strategy, not necessarily a strategy, profiles, time price opportunity. That's what we want. And I don't know that you're going to get any of this for Bitcoin, any of this data for Bitcoin, but something, yeah, it's very, very sketchy. What we wanted was volume, and you're not going to get much on something like a Bitcoin. But what the basic idea was this: you're going to get rushes of volume towards the bottom or the top of these ranges. And the guy that was trading was a smart guy, had been around for a while, and said, hey, listen, when you get that big volume up at the top of a range or at the bottom of a range, it's sort of the predicate for a reversal. I couldn't disagree more. What essentially happens is if you know why the volume's coming into the market, and there's a lot of reasons for it. There's news items, there's scheduled press releases, there's surprise news items, there's geopolitical angst, there's also key levels. And I've been talking a lot about key levels over the past 5 months because we have been trending and moving into uncharted territory. And when you go into uncharted territory, that's basically all you have going for you. Well, Bitcoin, we've traded 110 repeatedly, a lot. And now look at what you have. Well, Shane, we really love bidding 110. And I said, I bet you guys do. I bet a lot of people do. But my point to the gentleman that was talking about volume at an extreme is I said, hey, listen, the volume's coming in, at least in Bitcoin, the volume's coming in there because of a key level. And once that level's gone, we'll see the big drop. Now, right there, 1, 2, 3, 4 out of the last 5 daily lows have been right around 110. We're testing 110 right now. It looks to me like that's going to give way. Eventually, there will not be enough bidders to support this market. And once there's not enough bidders there, you're going to run into big trouble here. And what is likely to happen is you're going to get a big sell-off. So when I mean big sell-off, I'm talking about 110, probably right down to our support zone. I think that's a real juicy area. So I was aggressive. I believe the entry was in the trade idea yesterday. It was 107.250, I believe, 107.25. I like the idea of getting in a little bit ahead of our level just because I don't want to be left out in the cold. A significant risk. You're going for about, $2,000 there, 2,000 pips. I'm looking for that bounce to go right back up to 109. So the idea here for me, if this was going to be a perfect trade, I would be looking for this. Compression, break, get overextended down there, and then we get that bounce. Sort of that dead cat bounce we were talking about yesterday. Only this isn't a dead cat. We are following a macro trend. There are a lot of bidders in there with Bitcoin. But really, what do we have here? Test. Boom, 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 boom. You're going to give. That level's going to give way. The only question is how low do we go once 110 gives? I think we're going to go right down there to really just a key zone. I think our key level is exactly where it needs to be. Very confident in that trade. very confident in that trade. Not to say that it's going to be a winner, though. I mean, it's really hard to, it's hard to put your finger on these markets a lot of times, but I would be very surprised if we don't see a test of that zone followed by a swift bounce. I like that one a lot. So we'll be looking at that probably potentially tomorrow with a trade update. It looks to me like it's going to come into play. That's for sure. All right, we've got a few things that we do need to look at on the fundamental front. This was our trade update, week 42. We've had some changes. And what the changes have been is the BLS, actually the Bureau of Labor Statistics here in the United States, came out and they made a few announcements that really do start to give us forward guidance on where we think the scheduling for our economic events is going to be. And just to give you a quick look at this, this is what they're showing on the BLS government website. Now, we've seen this press release a few times. Suspension of government services. This website is not currently being updated due to the suspension of federal government services. The last update to this site was Wednesday, October 1st. Okay, we know that. But here's one that they dropped just the other day. I believe it was yesterday or it was last Friday, but it was last modified date was October 10th. So if they dropped this the 10th, they probably did it maybe after the market or we just flat missed it. That's possible. September 2025 CPI release rescheduled. Here's what's important. The BLS will publish the September 2025 Consumer Price Index on Friday, October 24th, 2025 at 8:30 a.m. Eastern. So we're talking about next Friday as being CPI day. Now, here's what's interesting because remember, we're still waiting on that jobs report. No other releases will be rescheduled or produced until the resumption of regular government services. This release allows the Social Security Administration to meet statutory deadlines necessary to ensure the accurate and timely payment of benefits. The Social Security payments, they're based on inflation. So what they have to do is they have to work the inflation numbers to know how much the government has to pay Social Security beneficiaries, and that's something that the government probably is not going to let slide on. They like to keep their voters, and if you stop missing Social Security payments, you're probably going to lose a lot of votes. So they said, well, we're going to have to go ahead and fire that up. So what we're looking at here is we're looking at CPI next Friday, as of right now today, and NFP being off the board until some further point in time. So if you do get the government to actually make a deal, to get in there and make a deal in the next day or two, well, today's Wednesday, tomorrow's Thursday. So if you get a deal in place, you may get NFP as early as Friday. Right now, we've canceled the streams for Friday. I'm going to be out of the office. But if they do have NFP, I'll find a way to do NFP live. That's about all I can say. We've gone 2 weeks in a row trying to do the NFP live, and the government doesn't seem to want to cooperate. So that sort of leaves us where we're at right now, which is in a state of flux. Right here, here's your latest updates. Government shutdown live updates as the Senate prepares for the 9th vote to fund the government. We'd be very surprised if they, in fact, get there. What to know on day 15 of the government shutdown. The shutdown is entering its third week. Senate is expected to vote for a 9th time Wednesday afternoon on a House-passed bill that would reopen the government as Democrats and Republicans remain at odds. The problem is nobody's moving. Right now, it needs 60 votes. The bill would need 60 votes. No new Democrats back the measure, which means that the Republicans are still about 8 votes short. That's a lot of votes when it comes down to a Senate that's roughly 50-50 with a slight majority there. So there's a lot of things. There's a lot of things happening. Next Senate vote is for 2:15 p.m. Eastern, so we're going to be looking at that for that vote to commence probably another 45 minutes. Like I said, we're not expecting this to pass, but it may. And if it does, then we're going to see a lot of action. So why is crypto plunging right now? Why are the markets coming off? I'm watching the U.S. or the Dow Jones is now off about 150 points. So we're seeing some weakness, and it's all about tariffs. Right here, Trump administration will set price floors across a range of industries to combat China. Price floors are sort of interesting. That means that what? It means that we're going to make sure that some things cost a specific amount. It's funny that his choice of words here is price floors, not price controls. If you remember the last election, price controls were a major part of it. You don't ever want to say price controls if you're in a Republican administration, so they're going to say price floors anyways. I don't really know the difference. Maybe there's a big difference. But this is all about tariffs right now. Besson says market weakness won't deter U.S. from taking strong action against China. That means that the administration's not worried about a big market correction that probably would stem from another big tariff scare like we had in April. And Trump threatens China with cooking oil embargo over soybean snub. That was about like 100% tariff or something. I mean, it was a big one. This is the one I'm interested in, though. Fed's mirror sees China trade tensions as a further reason for quick interest rate cuts. Now, remember, everybody in that FOMC committee, on the committee, or in that boardroom, there's a lot of ambition in there. That's the bottom line. I mean, you want to make money. I want to make money. Those folks want money and power. And right now, they know there's a lot of positions that are going to be open for pretty much debate coming in next year. You're going to have a new Fed chair that's going to be nominated and more than likely approved. You're also going to have a new vice chair. So you're going to have a new chairman and a new vice chairman. Those folks are going to be major players on top of the FOMC. Those folks are going to be nominated by the Trump administration. The Trump administration wants rate cuts at all costs. That's the way it is. They want cheap money. And right here, you have someone else stepping up and saying, well, these tariffs and these trade tensions, we should probably just cut interest rates down as low as we can do it. So this Mirren has advocated for another 1.25 percentage points in cuts on top of the quarter point move approved in September. So what does that mean? It means the prime rate's going to go right down around 2%, which is what I've been saying for a few months now, since we've really seen what the FOMC is going to look like in the near future. That means your dollar is going to be devalued, your stocks are going to be going up, your risk assets are going to be going up. Really an amazing time to be in the markets. It really is. I don't really know what else to say about it other than we are changing from a period of trying to get out of the unlimited quantitative easing with rate hikes and tightening policy, trying to rebalance the economy with that pricing stability and your employment, and now you're going into rate cuts. Not just a little bit either. They're going to be significant, and I don't know what that does to inflation. I don't know how you can control inflation without rate cuts. Maybe that's where the price floors come in. I have no idea, and I don't think that the powers that be know either. I think they're going to feel that out as they go along. I expect some real fireworks at the next Fed meeting. I expect the next two Fed meetings to be hotly contested. We're supposed to get quarter point rate cuts in each one. I don't know that that's going to be the case. But we do know that next year is going to be the year of the rate cut. Just looks the way that it's going to be. Okay, we've got a few of these markets that we do need to hit. Euro US dollar. Interesting stuff. 120 was really the key level that we were looking at. Liked that one a lot. If you if you could actually get on the right side of that trade, meaning if we can get short from up there, we'd love it. But for right this minute, your long-term macro technicals, I mean, you're starting to really see the development of the trend in what could possibly happen if the dollar continues to gain a little strength. I just don't see these levels coming into play. I really don't. I would love to get 112.50, 112.75. I mean, that would be a high-risk bet for me, a 5% or something like that. The odds of getting that are very, very low, especially going into the rate cut cycle that we think we're going into. So how would we trade the Euro USD? I have no problem. There's a lot of liquidity in here. We know where our key levels are. Let's just go ahead and go down to a 4-hour chart. It's a chart that I really favor as far as Forex pairs go, and you can see that we just sort of missed out. This one would have went right before the U.S. session. Spike low right there, sort of a spike high. So right there is sort of going to be your swing low right down around 115.50. There's sort of your spike high up there at 116.50. That's a tight range, about 100 pips. What did you get? You got to pull back right to your 38%. What was it? 116.10, and then we just have bounced and rallied since then about 25 pips. So this is going to be a relatively difficult market to trade. You're just going to have to be very, very patient. So if you were going to trade it right now on a short time frame, something like this, you're still going to work off of those spike lows. This is sort of that megaphone formation where instead of getting tighter, price ranges get bigger as we move forward in time. That's fairly rare. That really signals to us a lot of uncertainty with regards to what we think this asset is even worth. But it does give us an opportunity to potentially trade flat markets, a rotational market, one that's not trending any longer. So what we have here is you've got a low down around 116.10. You have a 13-period EMA at 116.09, and you've got 116.07 as a 38%er without any real big news slated to hit the market anytime soon. You could definitely be looking to do a little bit of work down here on a 4-hour time frame, maybe looking for 25 pips. Stop loss you could put down beneath this golden zone and probably be in pretty good shape for a nice little scalp. It's not a bad play, not a bad play at all. Something to think about there with the Euro USD. All right, dollar yen. We really wanted to get back to this 920 EMA crossover with the dollar yen because it really is one of those instructive type of charts. Now, this is a daily chart with the dollar yen. You can see right there, there's our gold bar, and we sort of gapped up after, about a week ago. We came in on the 3rd, something like that, and we just gapped up, and we had really a beautiful week before we got the big pullback on the tariff news. So, it was sort of, what do we do now? Well, I think you still have to be bullish. I really do. Do you want to buy a Fibonacci level here? You certainly could. You've got your 9 EMA. Your 9 EMA crossed over your 20 EMA, so it is a buy. Theoretically, you bought right here. Do you want to get long still? I think you probably could. You got 150.71. Our 9 EMA is right there at 150.114. So this is sort of a real interesting zone of about 40 pips. I would be probably looking for 150.75s, a little bit better entry point than you have right now. I think that would be key. You just got to wait this thing out. You got to wait it out, and in waiting, you can get better trade location. You just have to be patient. But I do like this. I think this is a fantastic opportunity potentially to bid this thing on this dollar yen. Now let's go to a weekly here, just very quickly here. The weekly, essentially, that's what you're doing. You're trading the last 2 weeks. Something like this. Now, one of the things about, taking a 920 EMA crossover is your time frame. You got a crossover right there that was your buy signal, but you'll notice the market was really choppy, and more than likely you got stopped out there before you got the real big move. So if you wanted to play a pullback here on the weekly, you certainly could do it, and that's essentially what we just had up there, a 2-week range and a nice little pullback. One of those things. We already looked at the Great Britain Pound USD. Let's take a look at one more of these. And then any markets that you'd like to look at, I'm more than happy to assist. We had one of these trades a while back on the 920 that was pretty good. This right here is Great Britain Pound Australian dollar. Now, the Australian dollar has been on fire lately because of the gold market and most precious metals really being on the rally right now. This Great Britain Pound Aussie, nice big sell signal on a weekly. Since then, it's sort of been compression. Do we have a conflicting indicator? We have a sell right there, a big purple bar. So you're doing all right. You haven't been stopped out yet. Your stop out's going to have to be up there somewhere. But how about the daily? You got conflicting indicators. So what do you do in that situation? Do you want to play the weekly to the short or the daily to the long? I don't know. I think the daily is probably the best way to go here. It looks like that weekly chart's flattened out and you might actually get chopped up. I would probably be, especially after this move, that's a nice big bearish move coming off of that sell. And now you've got a bullish type of move with the Great Britain Pound Australian dollar. I would probably be thinking about potentially taking that thing to the long side. I think it's possible. Now, a lot of folks are probably really favoring that short side of this market, and I understand why. But still, now you've got a bit of a change in what's happened with regards to your macro market state. You've got the big move. Right there is your big move back on the 10th of October. The tariff talks messed everything up for the Forex, and now you're flat there. You got an inside bar, and now you've got one of these where our crossover did develop for this week. That's a tough one to pass on. How about the 4-hour chart? And there you have it. The 4-hour chart sent you along a while ago. Now it was back on the 10th. So as you can see, we're just still reacting to what happened last Friday and trying to really frantically price in the tariff, the implication of the tariffs. That's for sure. All right, let's see right here. We've got Tina. Good to see you. Tina, welcome. Any chance to short entering at 51.37.4 for silver? Any short opportunities to trade the short silver on the 1-hour chart? Well, I like silver. Let's go ahead and let's talk a little silver. As far as I'm concerned in the macro state, and we'll get to the 1-hour chart here in just a second, but silver is it's a tough cookie. If you wanted to short, you're looking at 51.37. Potentially, you see the monthly chart, and we're going to go right down to a 1-hour here in a second, but you can really see the macro trend. And once we broke above 50, I'm hard-pressed to be able to make a case for really shorting anything but right up in the 55 zone, the 57.50 zone, and the 60 zone, at least for the near future. Now, if you wanted to go to a 1-hour chart, there's all sorts of different ways we can look at intraday price action. Right here, you're still up for the day. So the idea would be, let's see, if you're looking at 51.37 and you're going to short there, so you're going to look at somewhere right down in this zone. So essentially, you're going to be shorting yesterday's low. No, there's yesterday's lows right down there. So if you short from here, essentially you're looking to fill down and challenge yesterday's lows. I don't necessarily hate it. I really don't. Right now, though, it's sort of interesting. Where are you trading? Look at this void. This void, we opened down on the 14th, right? This void right here is what we're challenging. So if we're saying, okay, do we like this to the bear or to the bull? For me, I'm definitely on the other side of this trade. I'm looking to the long side of this market to do much of anything. However, if you're an intraday trader and you're watching your risk, I'm sure there's a lot of shorts dug in right here with the overnight high that was established about 7 hours ago, using that as their potential stop loss. I don't mind the trade. I really don't. You just really have to make sure that your leverage is dialed in and you get out if this thing explodes and goes topside. I mean, for me to sit here and tell you that you can't make any money to the short side is irresponsible, because you can. I mean, the traders, these short-term traders have got in up there, and I mean, that's an according to Hoyle liquidity sweep right there. And then you got sort of the next open, he really plunged. I mean, that's a big-time plunge before we rallied. If you wanted to short, you could. If you're going to short from down here, I'm not really sure where your stop loss is going to be. Maybe up here. If you're going to take a position, maybe up there. And if that's going to be the play, then you're going to have to see this market extend down past 50. And I think that might be a challenge for this trade. But if you're scalping and you really like this area as being a potential short, you may be able to do something like that and make it work. So just be sure that your risk is dialed in. You don't get too overextended, because that could really be a challenge. Now, as far as something like the 920, let's go ahead and go to a 1 hour chart and see what's developing here. If you're trading silver, $50 has to be on your mind at all times. More than likely, that's going to be an area where they pull back and bid, a lot like Bitcoin from 110 that we just saw 4 times in a row, and Bitcoin's challenging that zone again. So I would look at 50 as being a key level. We broke 50 right here, and then we just exploded to the top side after an area of compression. But this zone, I mean, very, very important that we understand where that is, because more than likely that's going to be an area, sort of a demand zone where you're going to get bidders. So if you were looking to take a short here and just use this 920 or took a look at it, you can see your crossover is setting up. So, theoretically, this was your bid yesterday evening, right after the Tokyo Open. Got a pretty nice rally out of it. Now you're looking potentially to take a short. Could you take the short and maybe ride this thing down to 50? Yeah. What would your entry point going to be? Well, we don't know. We have to have the crossover set up first. So that's going to be fascinating the way that plays out. I think you could be in an interesting position rolling to the short. Just remember, if you do go short silver, be aware of where 50 is. And if you see order flow pick up and the market start to rally in your face, you need to be very careful, because the sky seems to be the limit for these markets. Now, nothing goes up forever. But it's really hard to argue with the direction of gold and silver right now. I mean, those are really just extreme bullish trends. All right, let's take a look at gold here, and that'll be the last one. Let me see, 53,095 stop loss. Yeah, so, I mean, you're pretty close to this swing high up here. Yeah, I mean, if that's going to be the trade, I mean, like I said, it's very possible. Just be aware of 50 to the downside, Tina. You don't want to get in a situation where the price has to break 50. It certainly can. And if it does, you might be in position to get a big-time profit there. Just be sure your risk versus reward is balanced. If you're going to risk that swing high up there, be sure that you're paid for your effort. You definitely always want to be rewarded for your effort and not get chopped up accordingly. All right, let's see. Let's take a look at gold and then the Great Britain Pound USD. All right, I'll pull that up one more time, but my analysis is the same on that, Ahmed. We have a key level way down the queue that I'm waiting for, but does it come into play? I don't really know. As far as gold goes, pretty easy market to trade. Get long. This was interesting. We talked a lot about this over the summer. If you missed any of those old live streams, check them out. We covered gold pretty much every day, and the idea was there was sort of your bullish pennant on the monthly time frame, and we knew once that broke, we weren't just going a little bit high, we were going a lot high, and that has been the case. That's been absolutely spot on. So right now, I'm buying. I want to buy, and buy. I think if you're looking at the gold market and you're thinking, okay, is there a little bit of is there anywhere where I could stick, maybe short, maybe short-term scalps to the short? I would be saying 42.50. You're making all-time highs pretty much every other hour, it seems like. So you're at 42.50. That would be your next key level up for call or up for debate. And then 42.5, something like this. You're going to want to know where that is, 42.5. Excuse me, 45.5 or 4,500. Sorry, we're getting mixed up looking at all these different markets. But 4,500, definitely want that. And then 47.50 and then 5,000. 5,000 is going to be a great opportunity for us to short, just like 4,000 was. 5,000 is going to be a very good chance for us to short up there and maybe make a significant amount of money. Now, 42.50, is that as good as 5,000? No, it's not. But still, you could probably dig in right there and potentially sell and get that pullback similar to what we did at 4,000. But right now, I would much rather make my mistakes to the top side of the gold market. I don't want to lose a tremendous amount of money trying to short in the face of a trend that is just so strong. So right there, double bottom. There you have it. Pullback zone 41.15. So you got to see a pullback of about $70, $75, something like that, $77, and you'd have an opportunity maybe to get long. That's not a bad one. We're going to be watching for pullbacks in gold. Any pullback we really get in the metals markets, we're going to be thinking hitting that thing long. That's for sure. All right, let's see. We got Great Britain Pound USD. All right, I'll pull this chart one last time, and then we'll go ahead and call it good. As far as, how do you trade this right now? The analysis that I just went over was relatively simple. You're looking at something like this, 31.50, 31.75. That would be really your money level. 31.70 is your 13-period EMA, 31.50. That's a pretty good zone to reside in. If you wanted to trade it right this minute, right now, what can you really do? It's sort of what I just lined out. It was something like this, working with that swing low. You could do that. Potentially 133.45. You've got the moving average right there as well. So, this is an interesting zone. That's an interesting area right in there, maybe for just a short-term scalp. You just got to be smart about what you do. You got to be smart about what you do. Watch your leverage, because that level, it's a 4-hour level. It's an intraday level. It's not like one of our monthlies where our monthlies are pretty solid. These intraday levels can get swept up, especially if we start talking tariffs this afternoon. Okay, guys, so your strategy for trading the U.S. government shutdown is keep your eye on the news and be ready for that thing to reopen. Right now, we're having a vote. We're talking tariffs. The U.S. equities are all over the board. We were up 400 in the Dow, and then we were negative by about 200, and now we're back to even. That's extreme amounts of chop. That tells me that maybe there's a deal in the offing somewhere, or maybe the tariff talks are getting relatively serious. So be careful with what you're doing today. It's very choppy. We're looking for the CPI number next Friday. We're not expecting NFP today as well. This Friday as well. So stay tuned for what's going on. Tariffs and the government shutdown are definitely running things. We'll talk about U.S. civil unrest and potentially the Insurrection Act a little bit later, probably more towards next week, as we see a lot of news coming out of blue states and blue cities that allude to potentially forming alliances and things that are, I don't know what to say about it. We're going to have to do some research, but I will tell you this. The worse that the civil unrest gets here in the United States, the shakier the markets are going to get, because it'll bring us into an area that is pretty unprecedented for like 100 years, 50 years. So we've got to really look at that as being a key market driver as well. As far as everything else goes, tomorrow we're going to have one of our exclusive Switch Markets live trading webinars, the opening range breakout strategy. We're going to go ahead and set up an orb. Now, I did have to move the time of that for a previous engagement. It's just the way it's been this week. There's been so much influx, but I have an engagement that popped up that I have to attend, and then we're going to be doing that stream, that opening range breakout. We're going to be doing that tutorial and that workshop live webinar. That's going to be about an hour and a half later. So that's instead of 10 a.m. Eastern, it's going to be about 11:30 a.m. Eastern. So remember the link that went out in the Switch Markets newsletter. Go ahead and give that one a click, and that one will still take you there. So that's over on the Switch Markets YouTube channel, and also it's going to be in the How to Trade trading room. So that's sort of our exclusive webinar series. And then as of right now, we do not have a live stream scheduled for Friday. I'm going to be I'm not going to be in the office that day, so I will be missing that. But I say the caveat: if we have an NFP release, I will do my best to go live and do NFP live. We just don't know, and it's really starting to bother me because it's messing up our scheduling. All right, guys, that's a wrap. Thank you for joining me today. Have a fantastic trading session. bullish. I mean, we're bullish Bitcoin, we're bullish gold, we're bullish silver. U.S. oil, that thing, we'll cover it tomorrow when the EIA number drops, but we're really looking for that U.S. oil to make a serious run at our 55-yearly low. I think that that's really starting to develop. Fascinating stuff, guys. Thanks again for joining me. Let me see. T. Marina, you said 12:30 a.m. or p.m. That's going to be 12:30 p.m. Great call. No, it's not going to be 10:30 at my time. It's going to be 12:30 p.m. And remember, if you miss it live, it's a live webinar. So if you miss it live, you can always watch it on catch up, either in the How to Trade trading room, or you can see it over on the Switch Markets YouTube channel. All right, guys, let me see. Thank you for the insight. Stay safe. Yeah, I mean, I'm going to wish everybody to stay safe. I think that we're seeing a lot of things. I'm not ready to start ringing the fire alarm just yet and being a sort of a fear person. I don't believe in living scared. I refuse. But we're seeing some signs that the unrest is going to be significant. And we have that big protest this week. We'll talk more about it tomorrow. But we need to be aware of it, especially if you're taking home positions over the weekend. All right, guys, that's a wrap. We'll see you back here tomorrow with our Switch Markets live trading webinar. Remember, Switch Markets over on YouTube. You can watch it there, or you can watch it in our How to Trade trading room. So either way, we'll be live and ready to go, and that'll be at about, 9:30 a.m. 11:30 a.m. Eastern, 9:30 a.m. my time, about an hour or so, hour and a half later. Just go ahead and check our listings in the How to Trade trading room. All right, guys, that's a wrap. I'm out. Have a fantastic trading day. Trade the action well, and we'll talk soon. See ya.